Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, March 27th, 2017. I'm not really too sure how much more I can take of this. We're really sprinting on a treadmill and going absolutely nowhere. We're getting moves going up and down, but after this really huge move here, if you just notice this candle, this is where we closed. We've been traveling within the low range here. Well, let's just say here on it. We have a low of 23.21. We have a high of 23.59. So let's just say it's 40 points from the low to the high, but yet we've closed at this exact spot every time. So we're making these huge moves up and down, but closing exactly where we opened. And it's really frustrating if you're trying to hold on to a trade for more than a day because it's just you're like I said, you're sprinting on a treadmill and you're going nowhere. And it's I don't know whether to call it bullish or bearish because every move up has been sold off and we closed at the same spot. Every drop has been bid back up and we close at the same spot. And today was the big drop and we closed pretty much right at that same exact spot again. So it's tough to make heads or tails as far as whether to look at it as bullish. This was one of the targets that I said that the Bears had to push through and hold it down. You can see we did make it through the 50-day moving average, and then we found the buyers just come out of the blue with really no we the 2322 wasn't even it wasn't a fib retracement, it wasn't anything, but yet we found buyers coming in and pushing it higher. So um I think they're just really frustrating people right now, and you got to stay in trade mode. It's we could see this market collapse, and again, it would make perfect sense. But we could also see it rally and make perfect sense. So we got really no information, even though it really looked like we were going to get some information today. So let's look at things here. One is we have a bearish cross on the 50 and the 200. That is the really the first time we've seen that since hang on one second, let me go back. I want to say it's definitely the November here. So the last time we had a cross like that is going all the way back into October of last year, and from there it's been trading above each other. So you can see that we have things are starting to change as far as the overall dynamics of the market here. Now, short term, it could be an A, B, C here now, or C here, and now we're going to come up, make another wave B, and then come back down and make a and then make another wave C down here. That would make sense. But we would also be looking for a rally to come someplace up into the anywhere from the say the 2360 up to the 2362. As long as the bears hold it down there, then the next move should take these lows out, and then we start coming to the normal targets that we've been looking for, that I've been looking for, and that would be the 2301 down to the 2280. So right now I'm leaving the door open where if they came down, then hey, okay, they don't need to push up here, and we're going to come down and make the the low down at these levels here. If they move up, I wouldn't be too uh, really eager to buy it because I believe there's another move coming to the downside. Now, what is the one thing that has me not 100% sure on we have to come lower is we have the bullish divergences on the 60-minute chart. So it's why I said in the morning, don't get overly aggressive on the short side if you're not short, and just manage your open positions, because when we have these types of divergences, you don't want to be jumping heavy on the short side, and we can see what happened on it. So right now, the task at hand for the Bears are they have to keep it below the 2362, 2360 zone. That's what the Bulls have to get above. And really what they have to do is take out these lows at the 2322, and then we would expect that move down to the 2301 or the 2280. So again, this could be a wave A here, and now we're going to come up, make a wave B, and then come down and make a wave C. And I'm taking this from ETF that's in our trading room. He has this, so I'm stealing it from him. But in any case, that would make sense. Or we already made the ABC, and now we're gonna come back up and test the highs again. I hate sitting on the fence and trying to give you two different angles of the market, but it's being that we've been closing in the same spot, it's just leaving us on the fence where we could head higher or lower. Now, again, I prefer lower for the fact that yes, we hit the moving average support, but as far as price support, I mean, this is where I think things would get a little more bullish if the Bulls can hold this, or even down at that 2280. From there, it's going to it's going to attract buyers, because then they'll be able to establish a stop position on where, if we bounce up and it gets taken out. But right now, yeah, you can say you could jump in now, but there's nothing that's saying that this low is in, besides just the bullish divergences, and we have to get above these moving averages. So if we take a look at the 15-minute chart here, this is what was leaving me to believe that we had another low coming, and that's really because this low right here, we had no buy signals. So typically what happens is we would come down and make another low. So then we would set up the bullish divergences on the 60-minute chart as well as the 15-minute chart, and that would get me a little more bullish on the markets. But you can see we landed right at the 50-day moving average on the 15-day moving average. If they move up, then again we're right back at that 2360. So we know the important part that the bears need to hold down and what the bulls need to push over, because if they get it above here, they still have the resistance up at this 2369. So again, I would just really stay kind of neutral. It's the best way to do it, because if it would make sense if we head down, but if we head up, this is where you want to be looking to possibly take a short trade. And when I say trade, I meant you don't really want to be holding on to this thing for weeks or anything. I do believe that we're going to get some kind of low, and it could hit this week or early next week, and it's probably going to be a good tradable bounce to do. But right now, there's too many things that are still kind of pointing for another low, and if we get that, then honestly, I think that we're going to have a nice trade to the upside, and that's pretty much. But we haven't really seen any capitulation yet. Yeah, we have had these gap downs, but they're just getting bid right back up all day. So it ends up not being all that bearish. So again, if they decide to gap it up, I would keep an eye on this 2360 area. If they get above that, watch the 2370. If they're there and it gets held down, I'm not against taking a short position and just using these highs as your stop, with the expectations that 2300 or 2280 is coming into play. So unfortunately, I'm back to where we're still looking for, what the market's intent. And I wish they would, make up their mind, because it's frustrating if you're trying to do a swing trade, watching these big moves come and go and ending in the same spot. So with that, have a great night, and I'll talk to you guys tomorrow.